I didn't come from anything. I came from a town of 700 people. If I can do it, you can do it too. At 13, I made myself a promise that I was going to be the one to change my bloodline. I didn't come from money, so I didn't want to take my parents' advice on this. Because it's one of those ones where, if you want to drive a Ferrari, you're going to take advice from someone driving a Ferrari or a Toyota. Every rich or wealthy person I knew was involved in real estate. $5,000 down, and it was a duplex. I didn't know anything about real estate, but I figured I'm going to push myself off the cliff and I'll learn. I'll learn this thing. I'll force myself to learn by buying it. I knew a little bit about multifamily, but just surface level coming from a flipping world, from a flipper's perspective. And then it really, really hit me as 22, 23 years old at that point. I just picked up about $100,000 in equity in 3-4 weeks' time. Now, he has about a $50 million real estate portfolio. So some of the things that I've learned personally is
Hello, everyone, and welcome to another episode of Multifamily Chronicles. Our special guest today is Morgan Ehrenzeller. Welcome to the show, Morgan.
Hey, Adrian, thanks for having me.
Morgan is the principal for Ehrenzeller Capital. Why don't you start by introducing yourself to the audience and tell us about Ehrenzeller Capital?
Sure. So I'm Morgan Ehrenzeller. I just recently turned 27 years old. I currently own 198 apartment building or units across several different. Majority of that's all privately held, not in a fund or a syndication. I do stuff with funds and syndications. That's all on the private side. We have some bigger stuff on the fund structure and syndication structure as well. Really, my entrepreneurial journey began at 14 when I created and developed a software company, and I ran that up until college. Sold it right at college, and then went to college, got 2 degrees, graduated in 2020. And fast forward, here we are today.
That's a lot. That's a lot to unpack out there. So tell me about how you started your first company at 14.
Yeah, so how that really started was we didn't necessarily grow up with a lot, but they gave me everything that I needed by all means. So like I had everything I needed, but I wanted to be able to provide more for my family and my future family and generations to come. So at 13, I made myself a promise that I was going to be the one to change my bloodline forever. So I started teaching myself a little bit of coding at 14, and then from there, I hired virtual assistants and offshore people to develop me a software platform that my partner and I we started selling at 14. Ramped up to about 15, 16 years old. We're starting to make some pretty decent money. And then at that point, since we were under 18 years old, PayPal and third party financial processors limited our accounts because we weren't an adult. So we technically were violating their terms of service to use them. So doing so, we were forced to pivot to a different currency, which then we found Bitcoin and cryptocurrency in 2011. So from there, we rerouted all of our software profits into Bitcoin. At the time, Bitcoin was about $30, $50, hovering around in that range. So we made that was one even kind of accident as well too. Really, really smart decision, but kind of an accident. I would say luck had a little bit of factor in that. So that was my journey with my software company and out of it to propel me into real estate.
Did you sell the company?
Yes. Yep. I did.
So you bought your first duplex when you were 17 years old. Tell me that story.
Yeah, so like I mentioned, the software company, we were making a bunch of money, and I didn't come from money, so I didn't want to take my parents' advice on this because it's one of those ones where if you want to drive a Ferrari, you're going to take advice from someone driving a Ferrari or a Toyota. So I didn't know what to do with the money, and I recognized one thing: every rich or wealthy person I knew was involved in real estate. So I knew I had to get into real estate some way, shape, or form, or at least to a degree be exposed to it. So I didn't know much about it at the time. So I decided it was a seller finance, $5,000 down, and it was a duplex. I didn't know anything about real estate, but I figured I'm going to push myself off the cliff and I'll learn. I'll learn this thing. I'll force myself to learn by buying it. So that's how that duplex at 17 unfolded.
Let's start from the first duplex to where you are today. Almost you're approaching 200 units owned. Tell me the most important milestones in your journey, and how did you evolve? Because it's not just an overnight process. I'm sure that there's a lot of there's a lot of pain involved in the process as well, a lot of hard work, a lot of hours put in. So walk us through your journey from the first duplex to getting close to 200 apartment home.
Great question. I think I'd say the achievement I'm most proud of. I mean, some people would say that stuff's impressive. I really don't think it is. Is I think the hardest part is transforming and becoming the person that is required to do this type of stuff. So on a personal development level, but from the duplex to fast forward, so I bought the duplex at 17. My last semester of college, 2020, COVID just happened. Now, in my free time in college, granted, I was doing what every young college did. Drink a lot, all that stuff. But in my free time, I was educating myself. I was reading Rich Dad Poor Dad, watching podcasts. I discovered the Burr method at like 18, 19 years old. And when I discovered the Burr method at that young, it started clicking for me that this industry has huge potential and was going to change my projection of my life and everyone in my family's life. At that point, it clicked. My last semester of college, in college, I was doing everything I could to make extra money. I was flipping cars, flipping shoes, flipping fashion clothes. I picked up a dog for free one time and I flipped a dog to make extra money. Just straight hustler mentality. Anything I could to make a buck to put into real estate. College 2020 or 2020 spring break, just got back from Cancun. COVID just happened. I went to my college town. I was the only person who bid on this house at a foreclosure. I picked it up for 10 grand. So I was 22, 23 years old at that point. Picked up this house for 10 grand. There's like 2,500 bucks in miscellaneous fees at an auction. So it's like 12,500 bucks total into this. Growing up, I was around construction. My dad was a carpenter, so I was very familiar with construction from the inside out. So he had me up on a roof at like the age of 9, and I had the pleasure of holding the flashlight my entire life, watching him and to do that type of stuff. So I put about 17K of sweat equity into that. And then I refinanced out on a bridge loan. It's worth 126. And then it really, really hit me. I was 22, 23 years old at that point. I just picked up about $100,000 in equity in 3, 4 weeks time. And then I was like, okay, where I'm at now in my life, I don't come from investment banking. I don't come from an abundance of money. Like I realized I need to stick with this because no other industry or other job where I'm at this point in my life is going to be able to do that for me. So I recognized that, pulled the bridge debt out, bought another two houses outright for 44K. Those were both big value add deals as well. A lot of meat on the bone on the tail end. Bought another house at a foreclosure with 25% down from a website called Pre-REO. They'll finance foreclosures with 25% down. It's a little gold nugget for everyone in the audience. That helped me get into a lot of these deals with limited capital. And then for about the first 10, there was all foreclosures and off markets, 10 to 15. After that, I ran out of money and I'm okay, how do I keep scaling? So at that point, all my friends from college were seeing what I was doing, these paychecks I was getting, everyone, my friends and family, they watched the entire thing come up. Okay, he's done it. He's proven himself out. He knows what he's doing. So at that point, like 15 to 30, was then friends and family, raising money from friends and family, old college people. So that was about the 0 to 30 mark. And then 30 and onward to where I'm at, when I got to 30, I was like, okay, I need to branch into multifamily if I want to keep scaling. This was up to that 30 mark was all, single families, duplexes, nothing over a duplex, just all very, very small stuff. So then I knew a little bit about multifamily, but just surface level coming from a flipping world, from a flipper's perspective. And I realized you can either pay with time or you can pay with money with to where you want to go. So I joined the mastermind to get caught up to speed on education on the multifamily side. Really dug my heels deep into multifamily for like 6, 8 months because I recognized if I trip and fall and make a mistake in multifamily, this could be a $500,000 screw up versus single family. It might be 20, 30, 40, 50K. So I did that, joined the mastermind, and then from there, I started buying a bunch of a 5 unit, a 6 unit, bought another 12 unit. Now these are all creative finance deals, less than 10% entry. So this was a major pivot point, which really helped me scale. Was going after creative finance deals with less than 10% entry. Now I can get to them much quicker with speed. I don't have the banks holding me up for anything, because before banks were, Morgan, I want to see 3 years tax returns. I want to see 3 years job history. We're not giving some young 20-year-old hundreds of thousands of dollars to go play Monopoly with. So I did a lot of creative finance structures to get into all those deals, and still to this day, a 6, a 5, a 12, picked up another 12 for 55K, picked up a 24 for 400K, 32K down credit cards. We picked up an 18 unit for 70K, picked up another 12 unit in Iowa, 12 unit in Kansas as well, and then a 46 unit in West Liberty, West Virginia, 22 unit in Bluefield, West Virginia, 34 unit in Trino, Texas. So now that's pretty much how I got from 30 to 198. Is a lot of creative finance, low down payments, and then I would raise that capital from one or two equity partners, and I would run operations, everything from there, and then they would bring the money, we'd run operations, boost the asset valuation, and then refinance out in 1 to 2 years, give all their capital back, and then we're 50-50 on the deal. So I know that was kind of a lot, but that's tried to be as detailed and give some gold nuggets there on how I did it.
No, thank you for doing that. Let's chat creative financing. So explain the concept, and then tell us how it works actually in real life. How does it work?
Yeah, creative finance. So most people are familiar with traditional finance. Traditional finance is where you go to a bank, they want 20 to 35% down. They're going to go do appraisals, inspections, title work, surveys, all of that. Generally, that's going to take you 2 to 3 months. If it's agency debt, maybe a little longer to get all this stuff buttoned up and wrapped up. Creative finance is where you have seller finance and you have subject to. Subject to stands for subject to existing mortgage. So an example with a subject to scenario, say this is generally when the owner is really only in substantial pain, is where I'll come in and I'll offer to take over the mortgage. So I'll take over the mortgage. I don't have to now go to a bank. I don't have them checking my credit, checking my income, checking my DSCR, tearing my life apart for the past 2-3 years. So I'll take over the loan. I'll make the payments, but on the owner's behalf, and then potentially give the owner their equity portion and a down payment. So this is a much, much quicker and easier than dealing with the banks. Or if it's paid off, you have the other option of just straight seller finance, where they become the bank and they give you a loan on the property and take like a first position lien on it.
How do you find those sellers that are willing to work with you on creative financing?
So a lot is finding the pain. I ask pretty much every single person on deals. I'm at the point I don't buy any, like, all of my deals I've ever bought have not been traditional finance. They've all been creative structures somehow. But how I do it is, granted, it's basically sales at the end of the day. Find the pain and then how you can be the value to that pain and solve their issues. So don't get me wrong, I get shot down and told no a lot, but I'm not scared to be told no. I was told no basically my entire life growing up. So I think some people are just scared to be told no. And it's like, to me, I really don't care. I don't have nothing to lose. So it's really finding the pain and then tying that value back to how you're the solution to that pain.
How much of the efforts percentage wise are actually coming to fruition, or give you a positively 100 contacts, how many you say that you get a positive response, at least some interest on?
So it's kind of one of those ones, if you don't know what you're looking for, you'll never see it. When I first tried doing it, it'd be like 1 in 50. Now it's like 1 in 5. Granted, I got a lot better at talking to sellers. You fall, trip your elbows, scrape your knees a lot. As you do this over time, you start to see common objections, and then obviously how you can overcome those objections. So now, before it was very, very slim. Now it's probably 1 in 5 I can talk into a creative structure.
How did you get you said you have to know what to look for, so What are you looking for? What you should be looking for?
For me, so this is going to be completely different for everyone. You ask me what I'm looking for is going to be completely different than what you're looking for, Adrian. And as well as we ask anyone in the audience, is going to be completely different what they're looking for. So for me, what I'm looking for is because I didn't come from money or abundance of anything like that. I was really looking for low down payments, debt leverage positively, and a positive DSCR, and 10% plus cash on cash. That's what I was looking for, me personally. That's what fit my buy box.
You're very young. You're only 27, but you already been on the entrepreneurial journey for 13 years. What are the best, the top lessons that you've learned as being a entrepreneur at such a young age?
I wish someone would have told me this when I first got started is go to someone who's living your ideal life and who's doing that what you want to do with your life, and go and work for free for them. Work for free for them and don't complain. Don't, sit with your hands out that anyone owes you anything, because they don't. But doing this, when you don't have a seat at the table, serve the table until you have a seat at the table. Because when you give so much to someone, eventually they're going to feel obligated to give back. B, you're going to get a hell of an education that education is going to be worth priceless. Like there's going to be no amounts of money that can pay for that, because if you or when you leave, you can take that education with you and you already have the playbook. You already know exactly what to do and how to operate. And see, like I mentioned, you serve the table enough, they'll serve it back. They'll feel obligated to give back to you. So I wish I would have did that sooner, is get around the people who are doing what I want to do. And like I said, serve that table, and B, just provide as much value as you can to them.
Did you ever get in that situation to serve at the table and learn and share with us how was that? How did it feel? Like give us some details, like behind the scenes stuff. How it happened, like tell the story.
Yeah, that's a great question. So, an example, I guess, just this year, I joined a fund, and this particular person, he is about five steps ahead of me, and they offered to pay me money to raise capital for their fund. I said, no, I don't want paid. I said, don't pay me. I don't want paid. Give me equity. Let me show you my value and let me prove out to you my value. Like, I do not want a dime from you. I think this, shows them a couple things. I'm dedicated. At the end of the day, I really don't care about money either. So I worked for that fund I still do, for probably the past 6 months. I've worked for free for that fund. Now that I've proven out my value, I've brought really, really good deals there, raised hundreds of thousands of dollars, definitely moving the needle forward for this particular fund. Definitely probably brought it at least $500,000 in profits over a quick couple months of just things I brought to the table to it. Now they pay me, even though I really don't care about it. But the thing I took is to see how this guy operates. And because I know I'm going to be there in the next 1 to 2 years, so I can bypass that time for that learning curve by doing this on the front end.
What have you learned from him so far?
So this particular guy manages multi-state. I mean, I already do that as it is, but really learning systems, operations, SOPs, and procedures on how he operates. Now he has about a $50 million real estate portfolio. So some of the things that I've learned personally is having that either a regional manager, property manager, and seeing how they operate and how they handle and take most of the stuff off of his plate. It's one of those ones. It's like delegate to elevate, and knowing where to delegate and which part of your business is at what time. I think is very, very crucial for your strategy on your growth. So that was one of the biggest things I took, was really seeing and being in those meetings, learning the types of questions he's asking, why he's asking those questions, and just absorbing that knowledge and that experience and soaking it like a sponge.
What would you say was the main drive when you first became an entrepreneur? And did that drive change? Is it different today for you?
That's a really good question. No, the main driver was wanting to provide more for my family, and that is still the driver to this day.
What advice would you have for someone that wants to invest in real estate today?
I would say partner with someone who knows what they're doing. And because if you don't, you're going to trip and fall. No, there's nothing wrong with tripping and falling and scratching your elbows. I think you should. But some of these are very, very, very costly. So I would recommend partnering with someone who knows what they're doing because you're going to bypass the learning curve. So that's going to save you years of time and hundreds, if not millions of dollars in just either mistakes you've made, markets you shouldn't have went into, different provisions and agreements, contracts that you didn't think of on the front end until you got burnt, until you're like, oh, I should have did that. So you're going to save yourself a lot of those types of scenarios by partnering with someone who's already been through the ringer and have done it. You're going to save yourself a lot of money and you're going to save yourself time because you're going to bypass, 5, 10, 15 years of a learning curve to get there.
If someone wants to partner with you, Morgan, what are you looking for in a partner?
That's a good question. I'm very open to partnerships. I think partnerships and collaboration is the new currency. If you can partner with the right people, for someone like me that I look for to partner with is complete transparency. You have to have 100% transparency in the light and in the dark. In this business, shit goes wrong all the time. There's, projects go over time expected, it's over budgeted. I get it. I understand things go wrong in this business and not, too often, but I understand things go wrong. So having that transparency and being able to communicate that is a very, very, critical thing for me to partner with someone on.
You have 2 degrees. What type of degrees do you have?
I have a bachelor's in marketing and I have a minor in business management.
That's very interesting. I think there were a lot of lessons over there from that you learned, well, from both, but from the marketing degree. So when I have a marketing related question, how important is for you networking and how important is social media?
Networking is extremely, extremely important. It's one of the top things that I prioritize as an entrepreneur because you're one good conversation away from potentially someone completely transforming and changing your life. It's just one really, really good conversation with the right person with where you're at in your life, and it can completely change the outlook when you're on your life in the future. So networking is very, very important to me. And social media, I believe, is also very, very, very important. If you look at the guys who, the top five per not even 5%, the top five wealthiest people, you have Elon Musk, Jeff Bezos, Mark Zuckerberg. What do they all have in common? They all control an audience. So if you can control an audience, Elon, Twitter, Jeff Bezos, Washington Post, Mark Zuckerberg, Instagram, Facebook. So if you can control an audience, I think there's huge leverage that you can pull in multiple different areas of different businesses. I think, getting, followers and all this stuff on their platform is really good, but you also have to start creating your own platform because that platform could be ripped out from under you at any given point and you have nothing you can do. You don't own those followers. Instagram, Facebook, Twitter, they own those followers, not you at the end of the day. So I think it's very, very important to start and, create your own platform as well. Now, I'm not saying go and, make a Twitter 2.0 or a Snapchat 2.0 or anything like that, but platform where you can get customer data and stuff like that and then start inputting that and filling that out.
Could you be a little more specific? Like, what does your personal platform look like?
So I'm actually working on growing that myself right now. So I'm working on building platforms for education for real estate and other business ventures, even outside of real estate. So I'm working on building out this community type of a platform that it would be my platform that I have control in. And then I have a community full of like-minded individuals as well. Because I think if at the end of the day, if you're a big entrepreneur and you have 100,000 followers, but they're not very like-minded, your conversions are probably going to be very, very little to very little and low on whatever product or service that you're offering. So that's what I'm personally focusing on right now for building out my own platform.
So quality, not quantity.
Exactly.
How do you network? Give me some like practical examples of how do you network? How do you do that?
How do I network? So at first I'd be going
Yeah,
to, originally when I first started out, I'd always go to like all the free real estate events, stuff like that. But as you grow, your time becomes worth much, much more. So now, as kind of in my opinion, there's different building blocks to the networking. At first you're going to all the free stuff. You don't really have much value to provide to people. Then as you start growing and scaling, the more value you can provide, generally the more time your time is worth as well. So now I'm more in on the phase of I'm paying to be in different masterminds and groups, high ticket prices to be around like-minded individuals, because either A, you can work your way to get into these groups. It's going to take you, a significant amount of time to find these people and get in their circle, or B, you can pay your way into these groups to be around these people. So you're paying with time or you're paying with money. And to me, my time is worth more to me than what money is. So at this stage in my life, I'll gladly, fork up 10, 20, 30, 40, $50,000 to be a part of a group where there's like-minded individuals, and they're probably doing already what I'm doing, so education is generally a little bit better. And if you're in a group of someone else who's paying $50,000 to also be there, chances are they're a little bit higher of a caliber of someone you're going to meet at a free event, if that makes sense.
totally. What helped you build your brand? What are some things that helped you?
What helped me, I would say, is having 100% transparency no matter what. So I don't just talk about, all great things. I tell people about the bad things that happen too. And I'm not scared of that. So most people, I feel like, they only want to show the highlights of what's been going on in their life. I show people and I tell them about the bad things that have happened too. And I'm very open to what I do. No question is off the topic. I'm very transparent. So I think over the years that's helped me drastically, especially from the lens of raising capital and posting what I'm doing often too. So people who have been with me, see me from a teenager, they've literally seen it and watched with their own eyes the building blocks of what I'm doing, so they feel more comfortable with me. So I would say, having that transparency in the light and at night is a really key thing that you absolutely must do.
What pieces of advice would you offer others aiming to build influence and credibility in the space?
It's a really good question. To build influence and credibility, leverage other people's stages, I would say. From the standpoint, say I'm at an event and say I'm on a speaker lineup, the same as, for example, we'll say David Green from Bigger Pockets. Now that me and David are both speaking at a similar event, my credibility automatically goes boosted up because I'm on with David Green. So I would say leverage other people and leverage other people's stages to help you get that credibility and help build that brand. Because each time you do something like that, it's going to get a little bit higher, higher, and higher and higher when you do things like that. So that's what I personally would do, and that's what I'm actually working on right now as well.
When you're looking at deals, Morgan, analyzing deals, how do you determine that a deal is a good deal for you? What are the factors? What to look for?
Yeah, so for me personally, I look for low down payments. So now my money can stretch a lot further into more asset classes. So I generally look for like 10% or less down payment. Now sometimes obviously the less you put, the harder it is for it to cash flow in like a DSCR perspective. So finding ones that like less than 10% entry, that DCSR positive, I look for that. I look for at least 10 to 15% cash on cash returns. I don't want to get too political, but I generally like, red states more than blue. Just, if you're parking money there, that stuff does come into play with an investment perspective. And I look for low entry with high upsides. So generally, most of my deals that I'm getting are 3, 4x equity multiples over a 3, 4 year period to hold. So I look for that at least 20, 25% IRR. Those are the types of metrics that I look for a good deal. And I generally try to stay away from like a lot of like unit makeups where if it's primarily all studios or one beds, I try to stay away from them because at the end of the day, you attract a completely different tenant profile than like a 3-2 or a 2-2. So by having a lot of studios or one beds, for example, you have a much higher turnover. So each time you have a turnover, you have vacancy, marketing dollars, land maintenance, leasing commission, janitorial, painting, drywall patching, repairing, suit turns, repairs and maintenance. List goes on and on and on. Keeping the tenants in there and keeping them for a long time is where I believe is where you grow your money. How you make the money is on the buy, but how you keep it and grow it, I believe, is on the tenant retention aspect, which is something I hone in on very highly.
When you structure a deal from a financial standpoint, and let's say that you're looking to attract extra capital, like capital you don't have, how do you typically structure that deal?
Yeah, so generally, when the deals I've been doing lately, on the capital standpoint, I'll find a really good deal. It's low entry, high upside. Like the metrics I mentioned earlier, most people are happy with like a 2x over a 5 year period. So these deals that I bring where it's a 3-4x over a 3 year period, most investors are very excited when they see something like that. And it's very conservatively underwritten. So there's more money than deals out there, as crazy as it sounds. If you can find the right deal, you can find the money. I have that approach. So I really focus in on finding a really home run deal because if I can do that, I can find the money very easily for it. So I'll find the home run deal, like I mentioned there, generally, and then I'll find one or two people to write a check. They'll write the check for the entire thing. They'll get all the cash flow. I won't touch a single dollar of it. They get all the cash flow on that asset, and then we'll refinance in 1 to 2 years once we go in and do our operations plan and we boost the asset valuation. So then we'll refinance in 1 to 2 years. They get their return of capital. So then once they're whole, they have their return of capital. Then the extra proceeds, we split 50-50, and then the cash flow, we split 50-50. So they provide the capital on the front end. I do everything else A to Z. We refi in 1 to 2 years. They get all their money back, and then we're 50-50.
Are you also managing the deals?
Yep. Some want to be more active than others. So sometimes, they're in the calls with the property management team, some aren't. But I completely leave that up to them because some of them they want to learn, some they don't.
Is value add something that still works in the current market conditions?
I believe so. That's pretty much all we're buying right now is value add plays and focusing on a lot of finding a broken balance sheet and not a broken asset, so to say. So there's a lot of different ones where we're going through and they're putting items that should be below the line, like your capex, your mortgage payments, stuff like that. They're including this above the line in their operating expenses. So a lot of the assets we bought in had those types of things baked into the NOI, which significantly compressed their asset valuation. So really like those types of deals, finding the ones with the broken balance sheet, not necessarily the broken asset.
I see some books behind you right there. Are you a reader?
I think yes, I'm a very big reader. I think every entrepreneur probably is. It's one of those ones where you can compress 30, 40, 50 years of wisdom into 200 pages. I think books are great, and I think it's a great way to move humanity forward.
Tell me about your top favorite books and what you've learned from each one of them.
So I I'd like to say I'd say Rich Dad Poor Dad I think is everyone's go-to on, first breaking into it. But when the real estate side, I really liked this book here, Multifamily Millions. This is the book that got me by David Lindahl that got me out of the single family space and into the multifamily space. Have you read it, Adrian?
I have not, but it's on my list now.
Yeah, so really good book. David Lindahl has tens of thousands of units. He started out as a landscaper. He is a writer that really decompresses things into like a third grade level. So he has a really unique writing style that almost anyone can digest and understand it. So he teaches little small tweaks on how you can move big valuations in multifamily. For one example is in that particular book he'll go in one of his apartment complexes, 100, 200, 300 units. He'll go and he'll partner with like internet providers. Okay, here you have exclusive rights to market to all of my tenants. I want a 5 or a 10% referral. Now, doing this across 300 units, you can boost your NOI drastically, and doing so on the back end of your asset valuation just moves numbers across the board very quickly. So that's just one of very multiple that come to mind right off the get go. There's that one, and then one that once I think you once I think every entrepreneur gets to about the 10 million mark, they kind of plateau when it's hard to scale to the next mark at 100 million, because going from 0 to 10 million is completely different than going from 10 to 100 million. Completely different dynamic. So I have another book back here, Buy Back Your Time by Dan Martell. And I think this is really good if you're right around that 10 million mark, or you're plateauing around 1 million a year and you can't really seem to get over that hump of that next growth phase. So Dan Martell has a lot of different perspectives on how to set up systems, processes, hire those team people to help get you over that next growth phase, so to say. So once you get to that, one of the biggest things I've taken away, delegate to elevate, new levels, new devils, which ways to hire on your team and what positions first and why and what they matter. So that book there is really about buying back that times to focus on what your craft and what you're really, really, really good at, and honing in on that where you produce the most dollars per hour in that particular task. I'm sure everyone listening has that one niche that they're really, really, really good at. And that's generally probably where your highest dollar per hour is made at. So focusing on that one, and then delegating the rest off to other team members to grow the business.
How do you feed your pipeline of deals? Where do you get your deals from that you're looking at?
That's a really great question. So, my pipeline of deals comes from an inbound marketing approach. Most people do outbound marketing where they're going, driving for dollars, mailers, all that stuff I'm sure everyone has heard of. But I take a different approach. Mine, that's all chasing. So, in marketing, you have inbound, you have outbound. That's outbound. You're chasing it, you're running after it. I set up funnels for inbound where maybe I'm subscribed to wholesalers, buyers list, brokers. I'm posting in different groups. So like every morning or every day, my email is flooded full of deal flow. Now, when you analyze so many deals and you have so much data coming in, I can spot a good deal from a bad deal a mile away. When you just underwritten enough deals and you see so much, a good deal sticks out like a sore thumb to me anyway. So I have virtual assistant who filters in through some of that deal flow to take some of the workload off me. If it hits a criteria, then he sends it to me, and then I look at it, and then I do the final underwriting on it and see if it's really worth diving into. So that's the approach that I have taken, is working that inbound funnel and then having VA filter out the good from the BS, and then sending it off to me for the final underwriting.
What are your favorite top markets that you're looking into possibly buying assets?
So top markets right now that I'm really looking into is, I like Florida a lot, but also I think insurance is going to kill a lot of people next year. So I don't want to be too heavily uh, focused in Florida. I want to have decent diversification, because I think someone like Uncle Grant here coming up next year is going to be getting bent over the barrel on insurance, and there's nothing really you can do about it. But one of a different approach I've been looking at and trying to keep a pulse on is, I think you'll resonate with this too, is markets that have big data and for AI data infrastructure coming up in the near future. So everyone is aware of the AI boom that's going right now. I think in the next 10, 15, 20 years, I think everyone agrees AI is here to stay and is going to continually develop. So where is all this energy coming from to house all this data need for AI and data centers? So places like Virginia, data center valley, was it Ashburn, Virginia, I believe, off the top of my head. So looking and trying to identify those particular markets on where where I think the trend is coming for big data housing and data centers is something that I'm looking into currently in this present time.
How many hours a week you work?
Probably at first, probably over up until about 150 units, probably 100 to 120 hours per week. Now, probably about 40 to 60.
I'm asking this because it's important for someone that looks at you and says, "Oh, 200 units, great. Like this is so seems so easy." I want them to understand like what's behind, what's the blood, sweat, and tears that you put in to get where you are today. What's looking like for you going, moving forward. Rent control is it's been a topic of the political campaign that just ended not long ago, a few weeks ago. What are your thoughts on rent control?
That's a great question. I do see a lot of places, cracking down with that rent control. I have friends who are really in those particular markets that rent control is happening, and I think their approach to doing deals this way is a one way to mitigate it is new development and doing this because if you go into new development, you're not capped at year over year increase. You can come straight to the top of the market immediately. So I think that that's a pretty interesting way to go if you're in one of those markets. Pretty interesting way to go about that. So you're not shooting yourself in the foot is by starting out in the new development game there. Now, granted, I'm not a new developer or anything like that, but that's just some interesting perspectives that I see where I think people could benefit from in those particular markets.
The elections are now behind us. What does the economical environment look like in 2025 and beyond for you based on the election results?
So I personally think that the upcoming administration is going to put pressure on the Fed to continue to drop rates. So as we see rates continue to drop, our housing shortage is continuing to rise. And then also from all of the neglect from our the Biden administration, letting I think of 11 million illegals across the border. That's what they reported anyway. It's probably more like 25, 35 million. So I think that the 7 million housing shortage today that's recorded, interest rates continuing to drop, and the demand to keep going up from all the neglect of all the people flooding our country, I think that's going to storm for housing prices to increase over the foreseeable future.
Morgan, amazing conversation. Really, really good to have you on today. I'd like for you to share some final thoughts to kind of wrap up this conversation. Hopefully, we'll get the opportunity to have more conversations like this in the future.
Yeah, thank you for having me, Adrian. It's really fun sharing, my story, and I hope that there's a younger Morgan out there that's listening to this. I didn't come from anything. I came from a town of 700 people. If I can do it, you can do it too. And if there's a younger Morgan out there watching this, I hope that this gives them the confidence and maybe the education that they can do it too. And if you're ever feeling stuck or need any encouragement, please reach out to me. I definitely want to help, especially the younger generation and the next wave of entrepreneurs coming. I hope this younger generation can really take something away from this, and I can help a younger Morgan out there.
I appreciate you sharing the time with us today. I hope to get you back here soon, Morgan. Thank you very much.
Thanks for having me, Adrian.
Everyone, thank you so much. This was another episode of Multifamily Chronicles. It's episode number 127. I hope to see you back here soon. Have an amazing day.